On YouTube, where today we're going to talk about how to trade volatility and FOMC meetings. Okay, let me pull up. Let's see what we got here. Let me pull up the YouTube so I have the chat on the side just in case you all have any questions. We can keep them going right there. Remember, if you got questions, drop them in the chat. Make sure you hit that like button before you go. I do this for totally free. I'm just here to help. So let me pull up the charts really quick with Barchart, baby. If you ever need the link to Barchart, you can also check my profile for and I'll put one in the description for a free trial to Barchart. Okay, so you can access exclusive data. All right, market data, a lot of great tools, including trade alerts and trade strategies. I'll actually show y'all some of that if you want to see it. Just let me know in the comments if you want to see some of this exclusive stuff. I'll show it to you. All right, let me share my screen here. Google Chrome. Let's see here. Boom, boom, boom. Share. All right, now I am sharing my screen. I'm going to pull up the calendar here because what I want to really highlight on is FOMC meetings, okay? Because that's when there is a lot of increased volatility, especially around economic events in general, okay? So one thing you want to look out for is these FOMC meetings. You can spot them on the economic calendar. Just go over to futures and economic calendar right here, okay? Once you're there, you can kind of get prepped for the week and find out like what is going to be coming up that is volatile. Okay, so jobless claims usually can move markets. And once a month, we have CPI and PPI. So you can see here next week, we have PPI here, we have CPI here. Okay, so next week is going to be another volatile week for us. So here's some ways that you all can prepare for the volatility. Okay, now, one of the things that is like most common is the VIX. Okay, I want to pull up the VIX to show you what volatility looks like on a chart. Okay, so when we pull up the VIX here, you can see that at volatile times, the VIX spikes. Okay, now this is a gauge of volatility in the market. Okay, if this goes high, that means there's a lot of turbulence going on in the market. Now, if you're looking at this, you're maybe thinking like, how can I make any sense of this? But the key to really seeing this is being able to compare it to, say, the S&P 500, right? So a lot of people hear about the VIX and they're like, oh, the VIX spiked up. And like, what does that even mean though, right? So if we pull up and compare this, and Barchart, there's this cool tool where you can click compare right here. And I can add a symbol to the chart, right? Now I can add it by percentage. Let's do main pane percentage change because I can do actual values, percentage change, net change, but we'll do percent change. We'll see what this looks like. Okay, so looks like it spikes a lot more than the market does. So what I'm going to do is, because you can see this thing spikes 300%, right? Because it's spiking volatility. But what I want to show you all is how this affects the market. So what we'll do is we'll move this down to a new pane at the bottom so you can see this here. Okay, so let's actually change this up a little bit. Let's change it to candles. How about that? I mean, because I could make it a line and make it thicker, right? So we can, make it a thicker line so you can really see, right? So I'll show you the line first. How about that? So you'll see that when the market comes down, you can see that this is spiking up, right? Same thing here. VIX goes up, market comes down. Market crashes, VIX goes up, right? Same thing here. Markets come down, VIX is going higher. Right here, we just had our tariff fall off and sell off right here. Market spikes up, right? And so what I'm trying to get you to understand or see here is that one, when the VIX, there's a saying that goes, when the VIX is high, it's time to buy. When the VIX is low, look out below. Okay, so let me actually put this on candles so that you can actually see some of the highs that the VIX hit, because with the line, it's only showing you the close, right? But oftentimes in the day, price could have spiked much higher, right? So we want to be able to see that because now we can see the actual values here of when the VIX is spiking higher. So in 2020, right? So when we had the fall, the crash in 2020, where's that? Let's see here. Wow. You can't miss it. So you can see here the VIX spiked extremely high. But what that does is it should be an alert for you to be like, hey, when this spikes high, I need to be looking for opportunities. Now, mind you, okay, let's actually, chart this really quick because we have the chart here. So let's actually chart it. All right, so let's do this a little more condensed. Let's go to like a weekly, right? So we can really kind of condense the pricing here. Okay, so we can see here that we've got some highs right here from the past that also got rejected here. So we know that 36 is sort of a max altitude. Okay. When we get over 36, it's like end of the world. Just, no, this is not financial advice. I'm just a cool guy. Anything we're talking about in this video is not financial advice. I'm just a cool guy telling you about some of the cool things that I know and how I navigate the market. Now, I don't want to keep you all long here, so I'm going to keep this pretty quick, but you all can see that when the VIX is high, a lot of times there's a lot of increased demand in the market. It's falling, but that fear is what creates greed. Okay. So with that being said, we can still kind of chart it in this graph here. So we can see here that we got quite a bit of, highs right here, peaks. So at about 20 bucks, right? That's why a lot of times you hear on the news, they're like the VIX spiked above 20 for the first time in this long, right? That means that there's increased volatility, right? And so when that happens, it's like you need to prepare for these market turndowns because when the VIX is lower, you can see here when the VIX is closer to this level, right? So when we're trading below 15, right, the market's all good, right? The market's just cruising on up when it's low. But that's why it's a saying that says when the VIX is high, it's time to buy, right? When the VIX is low, look out below because it's just going to be, there's going to be these pullbacks, right? We're low here. Look at this. Boom, spikes up, sends the market down, right? So let me show you kind of what this looks like around Federal Open Market Committee meetings. Okay, so I plotted these on the chart here with these little arrows. So you can see here, this was a Federal Open Market Committee meeting, right? So after that meeting, it gave us clarity on the decisions of what the interest rates were going to be. And what did we see here? We saw literally at that exact level that we plotted, we saw that the VIX went below that level at $20, which means that, hey, we've got clarity, less volatility, market continues moving higher, right? But when the VIX is low, like I said, you want to look out below because it spikes up again. So a lot of times traders will use the VIX as sort of an insurance, right? It's sort of like, when good times are there and everything and the VIX is low, they may come in and say, hey, well, the VIX is low. Maybe I can trade this as an insurance so that when things go bad, I can profit off of that insurance, right? So let me show you how traders trade this with the VIX, okay? So let me show you a few ways that traders trade volatility. Now, one way you could do this, you can go to the ETF screener, okay? You can come in here and actually search ETFs by whatever you're looking to trade, right? So if we type in name as a filter, I can come in and type whatever ticker I want. It doesn't matter if it's Tesla, Apple, Google, whatever. I can type in that ticker, in this case, VIX, and it will show me ETFs that are trading this VIX, right? Now, here is something, this filter view is only going to show me what I add in a filter. Okay, so let's say I want to add volume here. I can come in and add volume as a filter, and then it will show up here now on this. Now, I'm always looking for volume because I want to know where are traders trading. Well, in this case with the VIX, they're trading one of my favorite tickers when it comes to trading volatility. Now, let's actually pull this up. This is double leverage now. So this is only for the traders. Everybody else should beware. Okay. So let's pull this up. Take a look at this. We got over 3.9 million shares traded. So it's worth the look for sure. I like it personally. But here, I do like Japanese candles too on Barchart. So a lot of times when I'm pulling on our charts, you won't see the candlesticks. You'll see the Japanese ones. So because it's a lot more clear, I can see like, all right, we had a high over here, it got rejected here and then broke out from this level. So when I was trading it recently, before a lot of this volatility that it was coming in March, one thing I knew is that March always brings volatility, right? So if I may not know the direction, right? I may not know when it's going to go up or down because sometimes price can continue pushing higher, but then maybe get weakness and then all of a sudden, start pulling back. But what I was looking at here, if I know that there's volatility coming in March, I can prepare for it here, right? And I mean, I would go through and show you the prop. Let me see how much I'm up on that particular trade. And just as an example, let's see here. I am currently up on that trade 63%. Okay. And I bought it at 1776. Like, no lie. I'm like, I can pull this up and show it to you. Like it's for real, 63% right here on this particular trade. Bought it at 1776. And why did I do that? Because I've seen it here in the past. Right now, if I know that volatility is coming in the March, right? If I know that March and September are volatile months, and I'm gonna show you a trick and why I know that, or why would I even be looking for those particular months, right? I'll show you a seasonality chart that Barchart has as well. So if I know that volatility is coming, I can use this as a hedge, right? And so this is why I'm up 60 something percent, because I got in at 1776 when we were at the lows, right? I just put in limit orders down here to say if the market goes high enough to push us down here, right? So we'll go in comparison here. We'll go back to our comparison. Compare with the S&P 500 in a new pane below, right? And we'll say, say actual values. Yeah, we'll do actual values. So we'll just keep the chart vibes, and then we'll change this over to a chart, right? And then we'll move this up so you can see the comparison, right? So if the market is moving higher, right? Markets have been hitting new highs, and this is going to a low. Okay, well, I need to prepare for March, man, because when the market starts to fall, I want to profit on that. And that's how you do it right there, folks. Okay, so I hope that makes sense. I'm gonna check the chat, make sure I don't have any questions, but that's how you would trade volatility. And this is the VIX as well, so you can see the same thing with the VIX. Okay, actually, yeah, this is a negative. Actually, this is inverse, so this goes with the market. So if you wanted to short the VIX, this is a short ETF. But these are all ETFs that involve the VIX. Okay, so this is how you'll do that with the screener. You can come in here and just type in, like, let's say I wanted this on, Tesla. I don't know. Well, let's say, actually, I'm gonna show you another tool, but this is Tesla, right? If you type in Tesla, it'll show you short ETFs and anything. But here's another way that people trade against the short side of the market. If they know there's volatility, say in March or August or September or something like that, or maybe they think the market's going too high and they want to hedge against that, you can actually come into, I believe it's top 100 ETFs. Yeah. And then you want to add in these leveraged ETFs. Actually, if you want to say the short side, you can go for negative, right? And then we can see, we can adjust these by technical view here, change this. You can do fundamentals, whatever you're looking for, right? You can even do mini chart view where it'll actually pull up the charts for you. Right here, so you can kind of get a big picture view. But this is let's change it to technical, then we'll do volume, right? And we'll see where on the bearish side is all the volume, right? So we can see it's an SQQ, TSXL. This is Tesla inverse, right? So these are your inverse ETFs if you ever want to be bearish leading into these types of markets, because right now these things have kind of spiked up. So if we look at the flip charts, actually we'll go the mini chart so you'll see them all, right? So if we look at the mini chart view, I'm not going to keep you for long. I'm just showing you some ideas here. We'll be closing this out in a second, but we'll change this to candles, and then we'll say a 3-month view, right? So you can see that as the market went down, as a lot of these stocks went down, these spiked up, right? So, let me go back. Okay, so you can see here that as the market went lower, right as we're going into March, you can see these going higher, right? We had some more dips in April. These went higher. But what this is telling me is that when these are even high, I want to be looking for opportunities in the inverse of that, right? So if the short for the SQQQ is hitting, let's pull up the charts. Let's pull up the charts. Let's get into it, right? So if the SQQQ is hitting highs, right? And I compare that to its inverse, the QQQ. Let's do the QQQ, right? And then we'll put that in a new pane, right? And we'll say actual values, right? So when we see that And I'll change it to candles for the traders so they can see it. Right, so you'll see the trade here. So you can see here as this spikes up, the market goes down. But one thing I know that if this is hitting highs from the I can't, we weren't even looking to the left. We just plotted this and look at where it stopped. We've been here before. So I know if the market is, if the inverse to the market, or in this case, the short QQQ on the NASDAQ is at a high, well, that seems to be support for the market, right? Same thing here. We hit a high, that seems to be support for the market. Right. So this is how I trade volatility. And sometimes you don't even have to trade it. You can use these as tools. Right. So if the inverse to the markets are at highs, in this case, short ETFs or inverse ETFs or the VIX, right? If they're at highs, then its inverse is at a support. Right. Let's do another example. Tesla inverse has the second highest volume. So let's compare not the QQQ, but let's compare its inverse, the Tesla. This is going to be the bullish side, right? So we'll do this in a new pane. We'll switch this to candles for the traders so they can see the charts, right? So we'll switch this to here and move this open a little bit. So you can see this inverse relationship. I'll change this to candles. Let's do candles so you can see it together, right? So you can see that, and let's chart that really quick. So I know that in the past, we had support down here, right? But then a breakout of that level. But also, we had a little bit of a little resistance right here. So that's a key level, right? So if I know I'm reaching into this level that it's had so much weakness before, well, that must be support for the inverse of this, right? So if the inverse is going into resistance, then the actual underlying assets, say in this case, Tesla, it must be at a support. And in this case, look at where Tesla landed, right from levels from the past, right? So it had resistance here and it got a lot of price action here and took off, right? And here's another example of having to close a gap, right? It created a price gap here and we closed it, right? And a lot of volume picking up here, right? Because we retested this. So there's a lot of volume kicking up here and you can see the rejection from the inverse. So a lot of times, this is a way that we can see, is it time? Is it support? Well, if I'm looking for support on an asset like Tesla, the market, or anything, I want to go to the inverse and make sure that it's at an area of resistance before I really say that I'm at support on an underlying asset. Does that make sense? Drop any questions in the chat. But I wanted to show you one last thing. Okay, so Barchart does have a seasonality chart here. Okay, so you can click on the seasonality chart. It's under the stocks tab. Excuse me, and then come under where is it under here? Let's see. Hold on one second. Okay, technicals, bar chart opinions. Oh, this is for, so we have to go to the SPX, right? So if we go to a particular stock, we can see the seasonality there, okay? So in this case, we're looking at the S&P 500. Now we can see here that we have the weakest months around August and September historically, right? So that's why I always tell people, be prepared for what comes in September, right? June and July usually are some pretty great months. May, we usually have some kind of, it's always something weird. It's never something crazy heavy. It's usually like flash things that last maybe like a week or 2 days or something. And then the market sort of recovers, as you can see. But March is usually pretty rough. But the market recovers from the dip that it provides, right? So March kind of is this hidden bomb that's there because there's a lot of news that happens around March that can send markets lower. But I always tell people to be prepared for what comes in August and September. And a lot of times too, I've seen it in some cases where bearish traders may be over leveraged in positions, and then it may send the worst in October. So don't be overly bearish in these months. Wait for exhaustion and signs of weakness, maybe low volume at higher prices, maybe a lot of rejection, and then a lack of any catalyst that can push it any higher, right? If we don't see any boost coming, then that's when you want to spot weakness at this time, okay? So I hope that helps. Also too, if you have Barchart Premier, let's say you do want to trade these particular assets, let's say, let's take a look at the UV, what we talked about earlier. Let's see if we have it here, top trade alerts. So we do have the trading strategies here. So you can see different strategies that are play out. Maybe you're playing let's say you do the 50-day moving average. Oh man, that's a lot of trades. Let's actually look at something like NVIDIA. You'll be able to see top trade alerts here. So you can come in here and pick whatever strategy you want. It'll send alerts. These are alerts you'll get. So let's say you're looking at this particular strategy. You can look at the history on this trade too, and you can see the potential profit or the hypothetical profit and drawdowns. And this is what people have to be prepared for, the drawdowns, man. A lot of you all don't stick around for a great trade. That's not to say that if you're losing, stick around, but you got to know when to cut your losses, but also realize that you're not just going to enter a trade and just be positive. Right. So expect those drawdowns, and this is giving you the hypothetical trades. So it's cool if you press this chart here, it'll even show you where the signal came. Right. And so you'll be able to see these trades play out. Okay. So I hope that helps. Like I said, click on the top strategies. If you also expected move is another great page where you can see sort of what are option traders trading, right? What are the price ranges that they're looking at in terms of volatility? Also, the put call ratio is another great tool where you can come in here and see, you can turn on this volume grab and see what expiration date people are trading and what exact is it puts, calls, what, like, so if I click on this, it'll show me even deeper into this particular. So we saw the volume was here. Now let's put puts and calls side by side. I can see where the open interest and volume is, right? So we can see there's a lot of open interest on the 120 calls. And we can see there's a lot of open interest at the 110. So it's like, NVIDIA is trying to, hold this supported 110, but also, make it back to its 120 to sort of create this here. And gamma exposure will show you these things as well. So we'll see that 120 here. And then you can see this 115 is sort of a wall that it's creating right in here. So pay attention to that. Because that's sort of our next target before we even make it this far. Okay, so a lot of great tools here. I don't want to go too deep into these. I always want to keep these short and sweet, but I hope this video helped you understand how to navigate markets around FOMC. Two, you can come in here and see what option traders are. And I want to note something here. Like a lot of people may rush to trade options on these volatility things, but if we go to options and then click on most active options, if you click on ETFs, a lot of people trade things to prepare for volatility, whether it's bonds, gold, or even the inverse ETFs. But you can see that the options volume in, say, like the VIX trade is much lower, right? So don't always try to think that you need to take an options trade. Okay. I mean, if the market is there, sure, do your thing. Like I said, the only one that seems to be as high up here is the TQQQ, which is, that's triple in the bullish side. So nobody even seems to be SQQQ saw options down here, but only 48,000, right? So, be careful trading options on these types of assets because you're fighting time. Remember, we don't know when it's going to happen. We know it's going to happen. So if you are going to do that, make sure you buy some time. But I trade shares. Okay, so I'll come in and I trade shares on these, but none of this is financial advice, but always use these tools to help you navigate to find opportunities that are worth your trade, right? Because this is all about risk versus reward. Okay, we want to make sure that risk is worth the reward in the end. All right. Hope that helps. I appreciate y'all being here. Remember, smash that like button before you get up out of here. I appreciate y'all being here. I'll continue to do these classes. Make sure you drop any questions in the comments if you have any, as well as any topics you want me to cover. Maybe you got some questions about how to navigate Barchart or navigate the markets, or want any questions about your strategies or tickers. Drop them in the comments and I will get back to you all. But join us live every Sunday. I'll be over on Instagram at LRayJ. Okay. On Sundays, I'm going to start doing some lives over there, but I'll keep these live classes coming. So make sure you subscribe and turn on those notifications so y'all know when I'm going live. And we'll keep the education flowing, man. I'm here to help. So any links y'all need, check them out in the descriptions. Or if you need anything that you don't see here,